What is good, guys? It's Rey-Jay back with another video. And in this, I want to break down what's going on with the overall market, what you should be watching for moving forward, and what's happening with the different trends. I'm also going to break down what's happening with the news involving the market that just came out. But before I break anything down, all this information, before I talk about what's happening in the charts very quickly, let me first say that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 5 free stocks. The offer ends in 5 days. Check it out before they run out. Anyways, let's break down what's going on with the market. Today, we saw a lot of manipulation take place. Yesterday, Jerome Powell was being very hawkish. The market started sinking. We also ended up seeing, some bearish data that came out this morning. The Michigan Consumer Sentiment Report was lower than expected, and the 5-year inflationary expectations were hot, showing signs that people are expecting an increase in inflation. When all this data comes out, this tends to be not the best for the markets. But despite that, we had almost a million puts expiring, and the market makers decided to continue to pump the markets, and the market's holding up very nicely. So right now, we're still favoring the bulls big time. The market's continuing to push. What I told you guys earlier was the market would likely see this move to the upside. I did call this move, but I wasn't expecting it to be this strong. And now, with that being said, I still hold the same view about the dump coming in the future. It's just that we're not ready to see the bears step in. We're not ready to see a big rejection, and the market's continuing to push. Now, one thing worth noting is that on SPY, we have a triple bearish divergence in the process of developing as this thing is continuing to push up. But the problem is it hasn't necessarily rejected yet. We're not seeing it play out yet. And the market's continuing to hold up. And we're still favoring the bulls, especially on the 4-hour. So we're going to be watching this resistance in the 438 zone. If we get out of the 438s and see the 439s, there's not much resistance until 440. And above that, we have this critical trend line to be watching for on the 4-hour time frame. So if we go back on SPY, you will see that we have this very, very important resistance trend line right here that would take us up to about 441. So between 440 and 441 is where the next resistance zone will be if we continue to break out. And they might just continue to try to squeeze shorts and trap as many bears as possible. Even I wasn't expecting it to pump this hard. I was expecting a pump, but just not anything like this crazy. But when things happen, guys, we can't really let this get the best of us. Market could see a bit more upside, despite the fact that Powell was being hawkish, despite the fact that we got bad data for the markets, despite all the bad news coming out. The market makers are going to continue to squeeze shorts, so we're likely going to see more upside. But just to be safe, don't forget about what I told you guys about these resistance levels. Don't forget about these type levels to be watching for. And don't forget about the risk for downside in the future. Later on, guys, next week, going into Wednesday, going into CPI, there could be downside. We're not there yet, and the market's still holding up, so watch this resistance. For support, you're going to be watching 438 flat. If we break below that, watch 437.5. 436.5 and then 436. As of right now, we're still favoring the bulls a bit more. The QQQ just blasted off, which was so ironic. I mean, it doesn't matter if Jerome Powell is super hawkish at this point. It doesn't matter if we have all this bad data coming out. The market could just continue to try to go and just kind of do the most illogical things imaginable. So the QQQ got very close to this resistance. It hit 376.8, very close to 377. We also have 378 as resistance. So we're going to be watching 378 and 380 as two resistance zones. For now, don't forget that even though it's pushing up higher, we still have this bearish divergence developing on the triple Q, which suggests that there could be more downside in the future. Now, that does not mean we have to drop now. We could pump more and more and more. We're still favoring the bulls. The 4-hour is starting to curl. So we could still see the QQQ get close to these higher levels. We could get close to 378, for example. But we're not there yet. And just know that in the future, I still hold my same view of there being a rejection. We're just not ready yet. And we're starting to see the market makers just trapping as many bears as possible. Sometimes the market makes illogical moves, and if it happens, all we could really do is just react to it and remain calm, cool, and collected. So for now, the market is favoring the bulls. Looking at Nvda, the same thing is going on. Nvda is continuing to push. Now we're testing this resistance at 482. If it breaks above this, we could see 485 all over again. But if we reject off this expected to come back down towards 480, then we have 475 below that. We also have this trend line that was this historical level right here. This is historical support, which would be another resistance if we do continue to pump. But if anything, we're going to be watching this 485 area to 482 on Nvidia, see if this thing rejects or not. As of right now, it's looking bullish. It's trying to push up higher. But just know that despite how high Nvidia is trying to push, just like the QQQ and SPY, we still have a bearish divergence developing, which suggests that the market is likely topping. We're not ready yet. The top is not in. It may not be in yet, so we could still go higher, guys. I just want to warn you about that. I wasn't expecting the market to be this bullish. It's pretty crazy, but when it happens, it is what it is. On Aapl, we're continuing to break out. We have another bearish trend developing, signaling that this thing is topping soon, but the top is not in yet either. So we're going to be watching 185.5 on Aapl. Then the next level to be watching for was this historical resistance. I'm going to actually go back on the chart just to show you where the resistance happens to be. So right here, where this historical wick happened to be, 185.5 is basically one level to watch for. If we break above that, we have this imbalance right here taking us towards 186.5 would be the next level technically. Then we have this wick right here at 186. So we do have some tight levels on Aapl developing. If we get above 186.5, the next level is going to be 187.25. We're getting closer to these higher levels. Apple's continuing to be overbought. It's not looking like it's ready to reverse yet, so I can still see it push higher, but I just want to warn you all to be very careful. On Tesla, the same thing is developing. Tesla's continuing to push, but it's not that big of a push. I called out in the morning Tesla might push a little bit, but just to be very careful. We're barely at 212 right now, getting close to 214. Still not very strong from Tesla, just a small little bounce. And it's trying to continue, but there is going to be a risk of downside in the future if we do get that reversal. The future means maybe next week, maybe later on into next week. For now, Tesla's trying to slowly uptrend, but it's very tight right now, kind of like trading sideways and shuffling into 212s. It may continue to do so, but I want to see if this thing could try to break above resistance and try to get close to 215. We're getting closer to it, but I think that Tesla's just going to trade sideways, but it has some potential. So it might push a little higher, but make sure you watch these resistance levels and make sure you do what's necessary for your own charts and your own patterns and your own portfolios. All right, guys. So the truth is, sometimes the market could do very illogical things, absolutely insane things. I mean, like I said earlier, Jerome Powell was being very, very hawkish. Powell was trying to scare the markets, and yet the markets are trying to make their way back up. But once again, that does not change my view of potential downside coming in the future. We're not there yet. The market's still pushing, so it could push higher, but just be careful when it comes to this resistance. All right, so watch these levels, do what you have to do, guys, and I'll see you guys very soon. Thanks again, and peace out.